Hey everyone, welcome to another Impact FX video. In today's video, guys, we're going to be talking about something that I've been asked a few times, and that is how to manage your losing streaks from a mental perspective as well as a P&L perspective. And so we're going to be talking a bit about this, and it's actually a pretty good topic to talk about today because this week's price action was not as clear as last week's. Because last week's price action had just a beautiful flip zone, but this week's price action was caught between a monthly demand zone and the potential of a multi-month sweep of liquidity. So there was multiple different things I was looking for in the marketplace to play out to get involved in some trades, and just the way that price played out this week, I missed some really nice sells. I got some okay buys, and I wanted to talk about how on Tuesday, I didn't have the best day. I actually finished -1R on Tuesday, but how did I manage this mentally, as well as how did I manage the P&L factor so that I don't let my losing days affect me at all? And it's all about what our systems tell us about our edge and how we can then make sure that we just simply stick to our systems and never let trading become an emotional thing where you're so frustrated that you start risking stupid amounts, or that you double your lot size or anything of that nature. We have to stop this destructive behavior before it starts. And when you understand your edge and you understand what your bias is for the day, you can start to have control of your mind and you can have control of your emotions so that you make proper decisions based on your system. So, without further ado, let's dive into this topic and let's go through some of my losing trades this week and talk a bit about what I was thinking during this session. Okay, so let's go through some scenarios before we start talking and diving into the trades that I took. Let's start to understand that first and foremost, if we're trading something, there should be an ideology around what we're trading. So, if we think about what I was looking at this week from a framework perspective, the monthly had put in a new high, okay? And we had talked about this high as a group for a while, and it had come into a 6-month flip zone. For the last better part of 3 months, basically, as price has come down, we have been talking in the group about the mitigation. Now, price had finally reached into this zone. And I said to the group, this zone is either going to rally, and obviously it's not going to put a new high because it's a monthly POI. It's going to start its internal structural accumulation, okay? Or because the 6-month has reached a POI, it may wipe this zone for liquidity to come down even lower. Now, the thing that's tricky about price action is that as price comes into these zones, if it does this and keeps going, creating a distribution, and you were looking at longing this market for a mitigation, well, then at some point you're going to be wrong, right? We're not going to catch every single move perfectly. This is also why I don't do higher time frame trades like this off a monthly, hoping for, a million pip move only to get a 3RR trade. I am looking for the internal structure to give me upside trades based on the fact that we're in demand. But I have to recognize that at some point, price will create a redistribution, giving me sells. Now, the mistakes that I made personally this week is that because of my session and the time I get on the chart, there was opportunities to get into some sells, but they weren't in really good zones for me. So I was looking for price to actually mitigate a demand and then keep going. And what price ended up doing is it just mitigated a little bit and it kept going. And therefore I missed out on some really nice sells versus catching these nice highs for that mitigation cycle down. And this is the whole point I want to talk to you guys about today is if I have a rationale for my bias and why I'm doing something, and that rationale is rooted in statistical data and it is rooted in a framework, I get to now approach the market from a systematic point of view every single day. And if price does not play out based on my rules or my outlook, then I am not going to be emotional about it. I'm going to either adapt on the fly to what price is giving me, or I'm not going to adapt and I have to then manage my risk in the market so that I don't let my emotions get a hold of me and say, oh, well, price has to go higher here. So I'm just going to be now pounding on leverage, even though it's just ripping to the downside. And all of a sudden now you're left with a blown account. That is absolutely not what we should be doing if we're a systematic trader. So let's go and set up the context for what I was looking for on Tuesday. Let's look at the narrative that we've been playing with in the mentorship group for quite some time. One, this was a 6-month flip zone. So let's go to the 6-month. As you can see, we have tapped into the 6-month flip and we have been falling ever since. That makes total sense with mitigation. Now, if you understand that this sell to buy is also demand, then anything below the candle body and into the wick is the origin of the last higher high, right? So we made a higher low, higher high internally. And this right now is a mitigation. I was looking at a potential mitigation to the origin of the 6-month for a pullback. Now, let's go into the internal time frame of the weekly. That coincides with this demand zone. So we've been playing sells and we had some nice buys in here for mitigation. We had some new sells that I already talked about in the YouTube video a few weeks ago off a flip zone. And then we had more sells down into this origin. So I was looking for a pullback this week for what? Into something in this wick. And that would have represented somewhere along the lines of, 162 pip mitigation move. Okay. I still was anticipating potential downside movement to sweep this liquidity, but you never know when that's going to take place. Therefore, because if I go to the monthly was making higher highs. So this being inducement, I was looking for the inducement liquidity to get run for a pullback into the monthly flip zone potential, right? And that could have resulted in a potential 250 pip move. Now, this is the whole idea of this video today, folks, is that we have really good ability to manage our expectations based on a systematic way. And we have had about 5 weeks in a row in the mentorship group where the weekly outlooks had talked about POIs and all those POIs ended up playing out really nicely. Now, this week, price actually broke the low. But from my context perspective, if we start going into the daily, I was looking at these zones down here giving us some mitigation trades, right? This is an origin move. Now, if we look at this overall area, that move did indeed give a 34 pip move. Did it give a really nice trade that I was hoping for up into this daily flip zone here? No. But that's okay because that is where sometimes price just delivers differently than we anticipate, and we have to know how to manage our emotions. So let's go into Tuesday's price action and what I was actually looking for. Let's look at what I was thinking, okay? So based on what I was thinking here, when I woke up to the charts on Tuesday, price had reached a flip zone. So if you look at this price action all the way over to the left, guys, this yellow line, I had mentioned to the mentorship group that anything below this yellow line here would be an opportunity for a potential mitigation. Now, as you can see, price had a bunch of mitigation buys that people were able to catch if they would have traded London opens. And this was a later New York session, but I did not trade Monday at all. So this was a 39 pip move to the upside during London, which was a really nice trade. Now, as price came in to mitigate this flip zone, if we go to the lower time frame, to the higher time frame, we will find out that that flip zone represents a break of a structural strong low. Therefore, once this got broken, price came up and then flipped that. Okay. So I was looking though at price for this week, at least not, and sorry, not this week, but I was looking at price for my session, which was a few hours, right? I trade about 2 hours, 2.5 hours a day. I was looking at my session for a new mitigation. So let's just dive in a bit with the context that we just talked about price potentially to rally off this daily, weekly, monthly demand zone. You can see there was a plethora of really nice trades. Now, I didn't trade Monday, and I didn't catch this London move because I'm sleeping. So I woke up, folks, and I saw that price had tapped this flip zone. Now, what we have to understand about structure is that you look at structure and we look at the last leg here. Price had broken out of this last leg. This last leg had swept internal liquidity, which also mitigated its origin. Okay? And if you guys can't see that is an origin, we have to be able to look at this structure from the lens of a higher time frame. What does that mean? Well, guys, pullback, break, order block. Okay? So if I was to go to a different time frame, this would be an order block. And as you can see, price had shifted bullish. Because price had shifted bullish internally, I then was looking for price to mitigate and make a new higher high, sweeping this internal liquidity and this unmitigated demand zone, right? And we also have then an origin down here. So I was anticipating a daily mitigation, and because we shifted bullish, I was looking for this, okay? And we have to remember, I use the same rules all the time. And these models and these predictive structures happen so often that you'll see how in this day's trades that netted in 0 or -1 in an RR ended up playing out plus 18R for the rest of the week. Okay? So this whole video is about how to manage your emotions when things don't go your way. And that's important, right? It's important for us all to remember how to be patient. So let's break down the trades I took. Now, what you have to remember, folks, is every one of these trades you're about to see was profitable, but they weren't profitable for how I manage my positions. Every one of these trades, folks, went 1 to 2 RR. That means that I had 2, 4, 6, 8. 8 RR I could have had for the day if I would have just taken 2R trades. But I don't take 2R trades. I typically take 5R trades and partial. I can't partial a 2R trade. That would be a 1R trade. And I'm not a 1-to-1 RR trader, right? So we have to understand that using our rules and using our discretion is what trading is all about. So let's look at what takes place. Price broke out of structure, price sweeps the low, and we're looking now for off this demand zone. I got on the charts around 7 o'clock my time. What takes place? Price breaks internal structure, price comes down into this low, and I was looking for price now to run the inducement. We have signs of weakness. I want to see price take this inducement and come up into this zone or up into here, right? That would have been a 4-5R trade, right? What does price do? Price goes up to 2R, taps this lower high zone, which I could have shorted with a hedge for the continuation. But that didn't happen. And I ended up moving my stop loss to BE. I'm not going to go into my entries right now over YouTube. I talk about those extensively in the mentorship group and in the course. But that trade ended up being a negative 0.2, I believe. Okay. Now you see a -1 there. That's because I show in the group. It's easier for people to see the RR when I show the RR using this tool. So if you want to know how to use that tool, you just click on your fib retracement tool and you can use these settings. Pause the video, you can use these settings, and it basically helps people see the RR because they can't hover over like I can to see that that's 5.2. And you can see that that ended up being a 2R trade. Okay, so the next trade, guys, as price breaks down, I know that this now is supply. But as price is coming into these origins, we are getting lower and lower in the leg that sponsored the boss. And I believe that this now is starting to form liquidity, and I'm looking then for price to actually rip to the upside. Okay? So let's go to the next trade. Price gives me a change of order flow delivery on the second time frame, and I use a confirmation bias. What does price do? Comes up to 2RR and takes me out, negative 0.5. Okay, coming to the next trade. Price gives me my confirmation. What does price do? Goes almost to 3RR, comes and takes me out. What does the next trade do? Ends up going up to 2R and then comes back and hits me out BE. Pretty frustrating for the session. And at that point in time, like I said, and I was chatting with the group the entire time this was happening, 2R, 4R, 6R, 8R. I could have had 8RR for the day. Instead, I left with -1, just over -1 total. Okay? So, what I want to get across, folks, in this video is that this day was not a great day. I was reading price, as you can see, backwards. I was trying to catch the mitigation cycle of the demand. Instead, I should have been selling, as you can see. But some days it just plays out that way. And in this case, price actually just kept melting and melting and melting. And guys, those supply zones that I marked were not after the fact. I knew they were supply, so I could have shifted my bias. And as you can see, each one of these origins would have given me beautiful trades. And I could have smashed the market, making 10 plus RR if I would have been selling that day. Now, I stopped after these trades and I said to the group, it's just not working out for me today because price is not giving me a solid mitigation and it's going to break this structure. Once this structure broke, that was my session, that was my trade idea, and we move on to the next day. Now, if we counteract that and we fast forward to the next day. Now, before we get into the trades for Wednesday, let's now talk about the framework that I was using for that day, okay? So we have swept liquidity and now we have broken structure. All we have to do now is I went to the daily when I woke up and I looked at where price was. And price, guys, was sitting around this zone. This, to me, looked like liquidity. That price would probably run and then what? We'd have a pullback back up into what? A daily flip zone, because liquidity drives retracements. Okay, so this is your flip zone supply. All right, and we have had a big expansion leg that has a lot of imbalance. So when we use that context now, let's go into the lower time frames and talk about what I was looking at to sell. I was looking at selling the market down into this liquidity sweep. So now let's go into the lower time frames and show my trades. Okay, and we'll go through a couple days here. Yesterday and today's price action, the 28th. Again, we were coming up into demand as well. We were in supply. I got into, in the morning, this distribution. I got into a sell. That worked out. 3R, partialed, it hit 5R. My runner ended up eventually hitting BE over here. Got a little bit extra on that trade. This trade was a -3. I was buying off this demand for the mitigation cycle back up into here. Okay. This trade, I was looking again for the mitigation cycle back up into here. BE on this trade. This trade came a little bit lower, gave me confirmation, and we had inducement. Boom, got a 4R trade. The rest of that trade ended up hitting BE. And so as you can see, small loss, 0.3, a BE, a 3R, and a 4R trade. I ended up then taking another trade over here, which is an A+ setup for me, and this one ended up giving 3.5 RR plus a runner. And this ended up going to 6R this trade. Now, if we switch back to the higher time frame, 15-minute, you can see that I saw the liquidity, I sold into the liquidity, then I bought for the mitigation cycle that would have formed, as you can see, after the liquidity sweep. I missed this sell off this supply, but as price now came back up into new supply, I look for another sell. But if you actually start looking at the chart, this sets up even the next day's price action, which we'll get into in a few minutes. So you counteract this day versus this day, in which case I was negative 1R, and this day, which I was 3, small loss 4, this was 6.2 roughly, and a 3.5 RR, almost 10 RR on that day. Now let's look and go towards today. So what did we talk about? My trade idea was that price would sweep liquidity and have a pullback into the supply. So when I woke up the next morning, what did I start seeing? I started seeing the pullback forming. So I wanted to get involved in that pullback. All right? So let's dive into how I now got involved in a daily mitigation pullback. As you can see here, we are now currently live price right here. Price has done exactly what I anticipated and what I wanted for my ability to get into the next mitigation cycle after the liquidity sweep. All right, let's fast forward to today's price action. And I got up onto the charts and noticed that price had tapped this flip zone and you had a sell off. Price tapped this flip zone, which is the accumulation flip, and we had a rally. What does this do? This is a sell to buy demand. Okay? I was looking for buys in that demand. Now, price did not come to the origin of that move, but let's look how price played out. One, this price broke structure. This price is bullish, right? Higher high, internal higher high. I looked for a sell and a buy. That was my session for the day because that's how price typically plays out from a mitigation point. What did price do? Gave me my confirmations on the second time frame. Ended up getting 4 RR on this trade. My runner ended up hitting BE. Price came into the sell to buy on the 15-minute. Let's go back to the 15-minute. Price came into the demand zone that we just talked about. Okay. We go back to the 1-minute. I got my confirmations after the accumulation. And I got a 3+ RR runner. And this trade here is still running. Let's just go to the higher time frame. And you can now see that this trade played out through the entire day for that daily now mitigation cycle. And this is where we currently are at. And as I mentioned, we're back now in the daily flip zone. So I would not be surprised if we have a bit of a pullback. In a matter of a few minutes, I got 4R, 3R, 7RR. So 7RR, 9.5RR, and -1 RR. Now, for a lot of you, if you're having a day like this, you may have just continued to buy, continued to buy, continued to buy. And all of a sudden, you've just lost 3, 4, 5, 6, 7, 8, 9 R, right? Now, and also for some of you, you may not have known how to manage your positions. You may not have known how to only lose 5 or 0.5 R, 0.5 R, how to go BE, how to move SL to only 0.2 R. You might not understand how to properly manage your positions and have a framework for price so that you know when to get out of a trade. And I teach all of that and I tell everybody in the mentorship group and they see how I do it on a daily basis. And the importance of that, guys, is that my system and my confirmations are grounded in a framework. I have a systematic way that I view price action and I understand how to get in how to close and when I should be partialing based on my rules. Another very important thing that a lot of people do not do, they do not understand that one day does not define you. They have such a narrow viewpoint mentally of how to become a good trader. What do I mean by that? I mean that they will ruin an account in a single day. They don't have what's called long-term mindset. I know that if I have a losing day or if I have a couple losing trades, that my edge will eventually play out. It's about patience. It's about waiting for my setups. And it is not about my emotions. It's about what are my rules? And am I going to have the ability, am I going to have the cognitive ability to stick to my game plan? If I can't, and I'm so emotional and I'm trading all the time random things, I literally shouldn't be trading. You can't be a trader if that is how you're trading. You have to take a step back, look in the mirror and say, what are you doing? Give yourself a gut check on what you need to be doing to be able to become profitable. So if we talk about how you guys can get better and better at trading, it's all about sitting back and creating your system that you have proven to yourself has an edge. And when the day is not working out, it's not about emotions. Not a single one of these trades caused me to do anything outside of my system. Sure, was it annoying that none of these trades, like why did this trade, why couldn't have this trade gone up to 3R and then maybe giving me 3R and then come? Or why couldn't have this trade gone a little higher to this supply zone to give me 5R? Then I could have partial, right? Like why did they all have to go to 2R and 2R doesn't meet my rules? Sure, was that frustrating? Yeah. But guess what? It's not like I have never seen that before, because my system tells me that how I read price, I can get into a lot of really high quality trades to 5, so I don't have to worry if price doesn't deliver that way. The only thing I could have done differently in this day is I could have switched my bias and started flowing with the internal trend instead of looking for the external that I believed was making a higher high and ideally making another higher high. But I said to the group, some days don't play out the way you anticipate. Those are the days that is important. Those are the big days that you have to have control of your mindset. Those are the days that can fundamentally ruin your accounts if you don't have a systematic way to view the charts, because you're going to get emotional. And for some of you, if you took this loss, you would double up this. You took that loss, you would double up this. And next thing you know, instead of only being down 1R, you could potentially be down 10R, 20R, 30R. Because you get so emotional thinking that the market's out to get you when it simply is you're wrong. And you either need to change your bias or you need to get off the charts that day because your idea that you came to the market with was incorrect. And that's okay. If you're incorrect for a day, you move on and you come the next day, because the next day might deliver exactly the way you want, and it might give you 7R. Then the next day might deliver exactly the way you want, and it might give you 7R. Right? This is the difference, where simply waiting for the next day to trade can actually fundamentally help you get back on track. But you have to be able to rinse and repeat the same system every day. Otherwise, you're always going to be confused, because you don't know how to trade the same way every single day. So guys, this isn't a crazy video about some new trading technique or new cool sauce video that you are hoping all to stop trading the same way and making mistakes video. This is literally me telling you that for a lot of you who are not successful yet, it is because of what I'm talking about. It's because you have days that you ruin your accounts. It's because you have days where you don't trade your system. It's because you have days that you don't follow your rules. All of those things are way more important than some hidden secret that you're hoping to find. Okay? So watch out for some coming videos. Next month, we're going to go over some more price action. But I hope this video is helpful for those of you who want to take trading seriously, for those of you who actually want to get better, and who are willing to sacrifice and change your emotional bad habits and start learning how to trade systematically so that your emotions are completely out of trading. All right, we'll see you guys on the next one.